following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, we are back. Let's talk futures. We have a brand new guest with us today. We haven't heard from this cat before. I've only met him once before, but work closely, I think, with Michael Burke and Jason and Tim. He comes with good credentials. And so I'd like to welcome Trader Merlin, also known as Merlin Rothfield. Good morning. How are you, Merlin?
Good morning. Any better, I'd be twins, Jim. Thanks for having me.
No, it's my pleasure, man. It's great to meet you too, man. You know, I've heard a lot about you. It's funny because me and Jason, who you know, obviously, started this whole thing up about 3 years ago. It was just me and him. And it was brutal because, you know, just me and him all morning long, you know, and he's in California. He has to wake up early. And even back then he mentioned your name several times. So you're well thought of.
Hopefully he wasn't cursing my name, but that's okay. Well, we'll take it. No, I love Jason, Tim. You guys got a great team over there. So I'm glad to be here.
Yeah. Now, so where are you located at? Where are you sitting?
I'm in California. Yeah, I'm sunny Southern California right now. Unfortunately, I've got like yard workers around me, so you can probably hear like weed blowers in the background. But I've got some soundproofing going on. We should be good.
Yeah, no, I don't hear any of that. And so, what's your journey like? When did you start in this trading business?
Going all the way back to 1996, I was looking for long-term investments and just kind of fell into day tech and island back in the days, you know, some names that the legacy traders might remember. And then I just got frustrated with long-term investing. I worked for a financial planning firm for a while. So I really have the long-term perspective in mind, went in line with my finance degree, but it didn't fit my temperament. I think one thing as a trader you have to understand is your trading style is a reflection of your personality. And I'm a very quick, fast person. I'm relatively impatient. I like instant results. So I gravitated more towards day trading in 1998, became a prolific day trader. I was averaging 550 trades a day. And, you know, fast forward as you mature and understand what trading is all about and how it really works, I would label myself more as a swing trader. I still day trade on a regular basis, but, you know, maybe a couple of trades a day, nowhere near the 500 mark I was at. So I trade everything: stocks, options, futures, forex, crypto. You know, my attitude is if there's an asset class out there that's going to have fluctuations and offers the opportunity to capitalize and make some money on it, then I'm going to look at it.
Yeah, and that's really the sign of maturing, right? Maturing as a trader, right? Just always just throwing trades in there, waiting to, you know, trying to get that home run going. And then you have to kind of take a slow transition to patience, looking for the right setup, being more patient. It's hard to do because of the emotions.
And the money involved, you know, and it's really about self-discipline. You have to understand who you are and how you react to different situations. So for me, I would argue it's probably one of the more interesting discovery processes that I've ever been on. I would say it's far more complicated than figuring out how you deal with a relationship. You know, it's how you deal with your own emotions and fear and greed. So that was definitely the most challenging part, which, you know, having done this for 28 years, you still get faced with those challenges on occasion. But, you know, hopefully those that are experienced have rules and a plan put in place. So when you do find yourself in a bad spot, it's like, okay, I've got a plan for that. We're good. Let's move on.
Yeah, I hear you. So today, for our first time together, let's talk about crypto a little bit. Let's talk about these kind of markets. We trade them in the futures markets, the CME group. We got the micros and some of the bigger contracts. But one of the things that I just read a couple of days ago, I think this was a Wall Street Journal article, and it was suggesting that the crypto miners. Now I'm going off script a little bit here, so hang with me. The crypto miners now are in competition for energy with the AI folks. So we have the AI folks competing, and the AI folks seem to be winning. As a matter of fact, it suggested that 9% of all the energy that we're going to need in 2030 is going to go to AI.
Could very well happen. Let's hope that the Blackwell chip by NVIDIA is much more energy efficient, right? And we can get a little bit more out of that bang for our buck out of that bad boy. But yeah, you are seeing, mass energy consumption from both of those entities. Miners, we could talk about them as a whole nother problem and subset of the crypto world. But, ultimately, I have to look at it as a trader. And yes, this is a fact that these are consuming more energy. And how do you play that? Well, you start buying, Edison and other utility companies and start making those plays, because clearly they're going to go, hey, our energy's at capacity. We might start raising our prices. And I don't know what it's like out where you live, but my energy prices have soared here. My electricity has gone from 16 cents a kilowatt hour to 34 cents a kilowatt hour in just a couple of years. So even though we're not a mining rich area here in Southern California, I am seeing that impact as well. And of course, the play will be made off the energy companies, and nothing I can do about it. We just have to adapt to what the market gives us. And unfortunately, I pay a lot more in electricity. So yeah, AI space, I love it. We could do a whole show on AI as well. I'm addicted to the AI space.
Okay. Yeah, no, so I'm in South Carolina here, and we all have pitchforks and torches, so our energy costs aren't so far out of whack.
Nice, I like that.
Yeah. Anyway, all right. So let's talk about crypto. So, when you think about it, and I'm thinking through the lens of futures trading, most futures products have a conspicuous cash basis. So, as an example, corn is a physical, right? Copper is a physical, gold's a physical, and even like the Euro FX versus the US dollar, I can get euros and put them in my pocket. Can't put crypto in my pocket. It's one of the few ones you just can't get your hands on when we're talking about futures trading. And so for me, the question to you really is how does this market hold up?
Well, ultimately, I think it comes down to what's your objective here, right? So if I'm looking as a speculator trying to, work the price fluctuations of Bitcoin, which are off the charts, I mean, you have incredible volatility, then, the futures market is fantastic. The challenge with the Bitcoin futures contract, of course, is the initial margin, which is great to have the micros out there for Ethereum and for Bitcoin. I'm just going to be playing those market moves with the futures product. But if you want physical delivery and to impact the crypto space, you need to look outside the futures market, right? Because you have it's cash settled. You have no futures delivery. So I was kind of hoping that when they built the product that it actually would be physical delivery, which to me would change the complete dynamic of Bitcoin or cryptocurrency trading altogether. But unfortunately, we went cash settled, and it doesn't have as much impact. I feel like personally, if I'm buying a Bitcoin futures product, I'm not really contributing anything in any way, shape, or form to the development of the crypto ecosystem. It's just pure speculation on price fluctuations, which is great. I mean, that's really what futures markets are currently designed to do, unless you're a hedger and a producer. It's about speculation on price fluctuations. So to me, the product works as is, but doesn't do the greater good of cryptocurrency development and kind of growth of the industry.
Yeah, no, I hear you, man. I love being in the futures markets for crypto, because you could go short really easily, right? I don't have to borrow money from anybody. I don't have to do any stuff. Just hit the button and you're short, right? That's a huge advantage on the future side.
Massive. Especially when you have, moves like we've had over the past few days. I mean, yesterday you just saw some tremendous sell-offs in Bitcoin. It's like a lot of people freaking out, going, "What's going on? Well, that's the norm. In a very short window of time, you had to go from 62,400 all the way down to 58,000. I mean, those types of swings you don't see with most financial products traded on, on CME or any futures products. So the opportunity is amazing, but Bitcoin is the new norm. When you see something move 10, 15, 20% a day, the initial reaction is the Macaulay Culkin grab your face and scream. With Bitcoin, that's just called another day. So yeah, if anybody out there that's trading those products, you better have a different set of different blood type, because that's a pretty wild market.
Yeah. And that's probably the reason why vendors can't really use it to sell their products, because you have to kind of sell your product at a price point that's isn't going to fluctuate so much.
Yeah. It's funny. There's a belief that Bitcoin is quote unquote a store of value. It's one of the tenements of money, is it needs to be a store of value. So if Bitcoin is going to be money, it should be a store of value. And people always say that to me. And as big of a fan as I am for crypto and what I think it brings to the markets as an evolution of financial products, there's no way you can consider it a store of value. I mean, anything that goes from 70,000 down to 15,000 and back up to 70, I wouldn't call that a store of value. So yeah, it makes it a little bit difficult to pitch that way.
Yeah, but some of the conversation seems to have slowed down with respect to, yeah, we're going to 100,000, or yeah, we're going down to 12,000. We're kind of in kind of this kind of, I know that the ranges are big, but kind of a sideways mentality at this point.
Mm-hmm. So there's a historical norm that happens. And if you step back and look at the big picture from inception in 2009 of Bitcoin, there's this 4-year cycle. And I'm not trying to be a conspiracy theorist or anything like that. I'm a trader. So my whole life is about patterns, identifying patterns and capitalizing on those patterns, whether that's a 5-minute chart, daily, weekly, monthly, I don't care. With Bitcoin, this 4-year cycle is real interesting. This one actually started in November of last year. And that's the first year of that cycle is predominantly nothing but sell-off. So actually, sorry, not the last year. We're in the middle phase of it, which is this slow kind of downward move for 3 to 6 months after the Bitcoin halving, which happened in April. And here we are, 3 to 6 months in, we're 5 months in, and it's doing this exactly what it has done 3 times before. What's interesting is after about another month or two, so I'm looking at early October-ish, is when all of a sudden this really incredibly powerful bull market comes. And I don't know why, I can't explain it, but I look at those charts and every single time it has done it, you're talking, my price target for November of next year is going to be $250,000, which a lot of people are going to freak out about, but just mathematically, it lines up like your Fibonacci's do with the historical price movements of Bitcoin. And we could talk about regulation and some of the new things with the new potential presidential changes coming, how that might impact it. But the reality is patterns are there for a reason. They're a reflection of mass psychology and behavioral analysis. And if they're telling me that the huge bull market's coming, I'm loading the boat.
So, okay, so you're looking at seasonal patterns, basically, even though it's not seasonal, but
yeah.
you're starting that with the halving events, right?
Mm-hmm.
Okay,
so
and that's
yeah,
how you get.
And you know what the halving is, right? The halving is where the miners are rewarded, which is another a great play for people out there. When you look at what happened to Riot Blockchain and Marathon and Hut 8, these mining companies all of a sudden had their earnings literally chopped in half overnight. Well, that's going to impact their business. And again, there's trades that can be made there on those assets as well.
Yeah. Does it get to the point where it's just not worth mining anymore?
Great question. So, right now the mining reward for a Bitcoin miner is 3.125 Bitcoin. At $60,000, well, you're looking at, getting close to $200,000 every 10 minutes. So there certainly is a great monetary reward. The question is, does the cost structure of those businesses, will they be making money off of those 3.125 Bitcoin? And when we go to the next one, it's going to go to 1.56 something. And a lot of people go, well, at a certain point in time, they're not making any money from the rewards of the Bitcoin blockchain. But in theory, the way the trajectory has been going, we will see the price of Bitcoin not at 60,000 at that point. It'll be like 4 or 500,000, or as Kathy Woods thinks, 3.5 million is one of her forecasts for Bitcoin. When we get to those points, a miner only needs to make 0.1 Bitcoin and be making even more money than they would today. So the valuation of Bitcoin increasing with adoption over time, I think, is one of the cornerstones of the architectural structure of Bitcoin.
Yeah, and haven't we mined a huge percentage of the total that's available?
Yeah, so there's 21 million Bitcoin that are possibly could be made, and that will be done in the year 2140. So I'll be dead and gone long before that happens. When you look at the number that's created today, I think we're at 19,700,000. So we're only got a couple million left, 1.3 million left, till we're exhausted all the Bitcoin that are made. And then the question that you're probably thinking is, well, then what incentive do the miners have to continue to maintain Bitcoin's network when there's no reward for them, right? Well, the reward is they get rewarded for the block, which is right now 3.125 Bitcoin, but they also receive the fees that are transacted during that block. So right now the fees are about, maybe a quarter or half of a Bitcoin, depending on how active it is, but they'll get those fees. And if the price of Bitcoin is so expensive in the future, then those fees will be more than enough for them to maintain their business practices.
Okay. So who pays them? Who pays the fees?
So if I make a transaction, so let's say I want to send you $500 worth of Bitcoin.
Yeah,
I get to do that, right? No one can impede that process. It's just peer-to-peer payment. when I make that, I have to pay a little bit. So in one of my classes the other day I was teaching, I sent some Bitcoin as an example to the students. I had to pay 40 cents. I paid 40 cents worth of transaction cost to send $100 worth of Bitcoin. No big deal. So that 40 cents goes to the miner that actually solves that block. And if there's, there's like 3,500 transactions, I think, in an average block, every one of those is paying some fee. So it could mount up to be thousands of dollars.
So, okay, let's talk, but how does this fee transmitted? Is it automatic? Is it electronic part of the process, or is there a clearinghouse in the middle?
No clearinghouse. I mean, that's the beauty of this whole thing is one of the reasons I'm such a big fan of crypto is you've removed intermediaries. Imagine a world where if I want to trade a futures product, I no longer have to deal with the CME. If I want to buy a stock, I don't have to deal with the NASDAQ. If I want to buy a can of Coca-Cola, I don't have to deal with Kroger's or Vaughn's or Stater Brothers grocery stores. We've removed intermediaries. And as I think we would all agree, when you have an intermediary, you have an increased cost, right? That middleman is taking a cut, whether you're getting a car, a loan, a home. So with peer-to-peer payment networks, you're removing those intermediaries. So costs diminish significantly, and that cost savings gets passed on to you and I. So there is no intermediary. It's a decentralized network around the world of tens of thousands of people that maintain that.
Okay, so but end game, right? This is an inelastic market, right? There's a limited amount that's ever going to be made. We're already at a high percentage of it. So in an environment where there's a limited supply, it's kind of like a one-sided price chart.
Which is one of the reasons I'm a big fan of Bitcoin. When you have scarcity, right, things go up in value. I mean, what gives gold its price valuation? Obviously, people's view of gold, but also its scarcity. Yet we don't know the finality or totality of how much gold is out there. We have an estimate. We could hit an asteroid that's solid gold, and all of a sudden gold price drops. So with Bitcoin, the scarcity is one of the major drivers of price. And I think one of the misconceptions is that you have to buy a whole Bitcoin. You can go out, it's 0.000000001. That's the smallest increment you can buy of Bitcoin. It's called a Satoshi, which right now is going to be 6/10 or 6/100ths of a penny. So it can be broken into much smaller pieces. And I think a lot of people look at it and go, oh, I can't afford $61,000 right now. That's too expensive. Oh, I can buy a fraction of a penny of it. And if this gets bigger, I think for you and I, Jim, it probably doesn't make too much sense because we have a robust financial system, right? You and I are in the United States. We have dollars, we have lenders, we have banks, we have all the financial services we could possibly think of. But for a majority of the world, they don't have access to things like that, at least as robust of a set of tools as you and I have. And Bitcoin actually can represent that because you can build ecosystems in that digital world, which will allow people to get access to insurance, to all the different financial products that we have here in the US or in Europe. So we get adoption, and as more and more people start to use it, you have more demand, you have a fixed number of supply. There's only one place for price to go, and that's higher.
Yeah. And so I don't have a wallet. You need a wallet or something like that, right? So if you're going to be in the cash market, I guess, is it called the cash market?
No, spot market, but I mean, it's all really just the market. I mean, there's only one market for it. Ultimately it comes down to where you decide to keep your crypto. So for example, I've got a bunch of Bitcoin. I have this thing called a nano ledger, which is this little guy right here. It's literally a device that just keeps my wallet addresses and my keys to access those. This is safe because no one can control it. But if you have your Bitcoin or Ethereum or whatever crypto at Coinbase or Kraken, Gemini, Binance, it's not safe. At any moment that could disappear. We saw that happen with companies like Celsius, Voyager, and BlockFi. They've all gone bankrupt, and people lost 90% of their capital. So again, if you decide to get into the crypto world, you certainly need to think about, where do I keep it? How do I safeguard it and protect it from anybody else? Because you are now essentially becoming your own bank if you're using something like Bitcoin.
So you have like a thumb drive.
Yeah. It's just like a little USB drive that connects to my computer, and then it brings up an application. And it's funny because people say, oh, well, your Bitcoin's on this device. It's like, no, it's not on this device. What's on this device is simply the address on the blockchain where my assets reside and the keys to open that address. That's all that's on there.
It's like a digital security box.
That's exactly what it is. And it's your vault, it's funny because this device is meaningless. Actually, I could take this device, throw it in a blender, throw in little vodka and some peaches, and I could make myself a peach daiquiri with my ledger here, grind it up into the smallest little pulp, and just take that and drink it. And you're like, oh my gosh, you just lost all your crypto. It's like, no, there's a thing called a seed phrase, which is 24 words. And that seed phrase, I can recover anything, anywhere, anytime. So this material device is insignificant. What's really significant is the seed phrase, which tells everybody where your wallets are at and your private keys.
Right.
It's kind of a weird technology.
Right, but this is convenient, right? It's right there. You could put it in your pocket. You know, it would be like, it's almost like if you were hoarding gold, you couldn't carry all these gold bars around with you everywhere, right? You couldn't do that.
No. You know, it's funny. You remember if you get on an airplane, they say you're not allowed to travel with more than $10,000 in cash, right? That one always cracks me up. Well, you know, you could carry more than $10,000 worth of gold coins, right? You just have, you know, five 1-ounce gold coins in your pocket. No one's going to be the wiser. But if I was to travel with, let's say, $50 million worth of cash or of gold, there's no way I'm sneaking that on a plane. I mean, if I wanted to, I could put the entire US debt on this and say there's $35 trillion worth of crypto on here, and no one would ever have a clue.
Well, it's too bad you can't do that in the blender thing. It would work. It would be good. But
wouldn't that be nice? Just if it instantly erased our debt. We can devalue our currency as much as we want, but we're not getting rid of $35 trillion worth of debt.
right. Okay, so you're bullish on this, obviously. I could tell by talking to you. So let's kind of talk about the CME Group futures, right? So you know, I'm in my mind, it's like I don't want to have anything in my closet. I want to, you know, if I want to buy gold, I'll buy a futures contract. And I'll roll it over if I want to hold it. If I want to buy silver, I'll buy a silver contract. If I want to buy a Bitcoin, I'm going to buy a futures contract. And so the CME has created these products. The big one, which is probably out of reach for most of us because the margin there is huge,
like 70 grand.
That's too rich for my blood, as one would say. And then the micro Bitcoin is not. That's a smaller size contract. You could scale in, scale out, and do all the things that traders and investors do.
Yeah, and I think that's a great product. Just the micro of Bitcoin and of Ethereum as well. You know, it's nice to see those two products. I think what you'll probably get is you'll probably see a third one come online soon, which will probably be Solana, and they'll start building out those kind of digital asset futures product suites a little bit more, which I think would be a great thing, and bring more attention not just to crypto but also to the CME, because there's a lot of people that are interested in trading these because of the volatility. You know, as a speculator, that's what we want. We want the volatility. But yeah, I was kind of surprised when they initially came out with the specs. You know, when it was interesting seeing the competition to be the first Bitcoin futures product. And the originator, the OG, their product died on the vine. CME was second, but you know, five Bitcoin, that's a $300,000 product. So that's pretty expensive. I'm not sure why they did that, why they just decided to choose 5. I think it was actually in an effort to kind of keep it high price, so you keep out the lower the individuals with really low trading accounts. But by creating the micro, you've really helped people out significantly to open that door and allow them at least to experience that volatility, to play with it, and not get hurt too bad. Because if you're on the wrong side of a move like we had earlier today, yesterday, then you know you could lose everything, especially on a leveraged instrument.
Yeah, I think part of it, CME's one of their main objectives or missions is to provide markets for hedgers. And so with that bigger Bitcoin came out, I always thought, okay, they're really focusing on hedgers right now. There'll be a retail product later. And that way, that'll give the bigger players in Bitcoin a place to hedge. And hedging could be important here, right? You have the market on your zip drive. I'll call it a zip drive. And you know, if your technical analysis says, hey, we're it's seasonally it's time we're gonna be in a bear mode for a while, so I'm gonna hedge the investment that's in my pocket, and I'm gonna sell some futures contracts.
100%. You know, and I guess it depends on what your objective is and how you want to approach it. So yes, if my forecast is correct, which based off that 4-year cycle, what that tells me is historically starting in November of next year, the entire crypto ecosystem is going to fall apart, and we should see between a 70 and 80% decline in cryptocurrencies because it's happened 3 times before. So if I anticipate that, then starting in November, should I choose to, I could be selling futures products, selling the Bitcoin futures products, cap and offering that as a hedge for my portfolio. Now, I'm probably not going to do that. I will probably sidestep the market. So, if we look forward to November, probably about September, October of next year. So I got about a year to go. I'll be liquidating the crypto portfolio of mine and just going into stable coins, earning yield on that stable coin to the tune of 5%. And then once that market bottoms out, which will be in 2026, I'll load the boat all over again. But if I didn't want to take that tax hit, then yes, I could be using those futures markets as a hedge for my portfolio, so I didn't have to sell those assets and I could protect my losses.
Right. So you're talking about unrealized versus realized gains.
Yep.
Yeah.
Yeah. And the good news is, Jim, I don't make over $100 million a year, so I'm not going to get hit by this unrealized capital gains tax that's coming out. I had to throw that out there. Sorry.
Yeah, I'm a little
million.
I'm a little south of that also, but
Yeah.
that's okay. So we didn't even get a chance to talk about the regulatory stuff, which we could do on another episode. We're kind of up against time. Is there a way that folks can reach out to you and find you?
Sure. Yeah, I do a live show every day as well. So I love coming on programs like this, and I'll have you come on mine as well in the future if you'd like to. But yeah, you just go to YouTube. I'm on Trader Merlin, just Trader Merlin Show. That's pretty much it. I'm on Twitter as well, but I rarely use social media. It's an Achilles heel of mine.
Oh, me too. I know. I love Twitter. I know. It's bad. It's bad. I should read a book instead.
Yeah. I mean, it's fun to go there, and I love scouring it for information and getting all the good details, but I just don't use it enough to promote. So it's what it is.
Awesome. Well, I'm looking forward to getting you back here. I've learned an awful lot of stuff today. I really appreciate you spending time out of your busy schedule with us at NinjaTrader.
Thank you so much, Jim. Thanks to you and your team. You guys have a fantastic day. Thanks for having me.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.